Hey everyone, welcome back to Corporate Decoder, where today we're diving into a deal that is going to change how Clearwater Analytics Holdings, Inc. does business. Get ready, because this is a big one. So, what is going on here? Clearwater Analytics Holdings, Inc. announced on the 20th of December 2025 that they've entered into a big agreement to merge. Basically, the company is being bought out. This deal involves two other companies, GT Silver Bidco, Inc., which we'll call Parent, and its subsidiary GT Silver Merger Sub, Inc., which we'll call Merger Sub. The plan is for Merger Sub to merge with Clearwater, and then Clearwater will become a wholly owned part of Parent. This means Clearwater, as we know, it will no longer be an independent, publicly traded company. Now, this isn't just a handshake deal. The board of directors at Clearwater has approved this merger agreement, and they formed a special committee just for this. This committee was made up of independent directors, meaning they don't have any personal stake in the deal other than what is good for the company and its shareholders. They reviewed everything, looked at other options, and recommended this merger as being fair and in the best interest of everyone involved. So, what does this mean for shareholders? If you own shares of Clearwater's Class A common stock, you are looking at getting cash for them. The deal is set at $24.55 per S-share, and this is a fixed price, no interest. This is the merger consideration, as they call it. For those of you with stock options or restricted stock units or RSS, things get a little more complex. Outstanding awards will generally be cancelled and converted into a cash payment. This cash payment will be based on the merger consideration multiplied by the number of shares your award covers, minus any exercise price for options. If your option has an exercise price that is already higher than the merger consideration, though, those options will just be cancelled with no payout. For RSUs held by board members, or those that are already vested, they'll become fully vested cash awards. Other RSUs will continue to have the same vesting schedule, but they'll be paid out in cash. The agreement also has all the usual clauses, like promises and guarantees from Clearwater about its business. It also lays out what the company can and cannot do before the merger is done, which is pretty standard. They have to run the business as usual and get permission from Parent for certain big moves. Now, this deal isn't a done deal just yet. It needs approval from Clearwater's shareholders. They also need certain regulatory approvals, like the waiting period under the Hart-Scott-Rodino Antitrust Improvements Act to expire. There are other usual conditions too, like no legal issues stopping the merger. Here is an interesting part for a period called the Go Shop period, which lasts until the 23rd of January 2026. Clearwater is actually allowed to look for better deals. They can talk to other companies, give them information, and negotiate about potential alternative offers. This is pretty unusual and gives them a chance to see if they can get an even better price for their shareholders. They'll have more restrictions on seeking other offers, but there is a short extension for any company that had already made a good offer before the Go Shop period ended. What is a superior proposal? It is basically a better offer. The board will consider a proposal superior if it is financially better for shareholders, and if it looks like it can actually be completed. If they find a superior proposal, Clearwater's board can change their recommendation to shareholders and even terminate this current merger agreement to go with the better deal. But they have to follow specific steps and give the current buyer a chance to match or improve their offer. Like most deals, there are ways for either side to walk away. If the merger doesn't happen by the 20th of September 2026, either party can terminate it. Clearwater can also terminate if they get a superior proposal. Parent can terminate if the Clearwater board changes its recommendations. And if they do walk away under certain circumstances, there are termination fees. If Clearwater terminates the deal to go with a superior offer, the fee is $111.67 million if it is during the Go Shop period or the extension, and a different amount if it is later. If Parent terminates for certain reasons, like breaking their end of the deal, they have to pay Clearwater a whopping $521.13 million. That is a significant amount of money. Now, how is this all getting paid for? The announcement mentions that Parent has secured commitments for the money needed to buy Clearwater. They have equity financing from some big names like Permira Advisors LLC, Warburg Pincus LLC, Francisco Partners Management LP, and Temasek Holdings Private Limited. They also have debt financing commitments from Goldman Sachs Asset Management LP and GelQ2 Credit Investments LLC. This confirms they have the funds lined up to complete the transaction. There are also fee funding agreements, again involving those same equity investors. These agreements basically confirm that those investors will provide the money to cover potential termination fees that Parent might have to pay to Clearwater if things go sideways for Parent. This shows a real commitment from their financing partners. Following this announcement, Clearwater also put out a press release on the 21st of December to let everyone know about this merger agreement. So that is the core of it. A big merger agreement where Clearwater Analytics is being acquired for $24.55 in cash per share. It is subject to shareholder approval and other conditions, but the financing seems secured. Now let's talk about what this all means. This whole filing is full of forward-looking statements, which are basically educated guesses about the future. They're saying things like, we expect, we anticipate, and potential. It is important to remember that these are predictions and actual results could be very different. The company itself acknowledges this, listing a bunch of risks like the merger not happening or regulatory hurdles or even shareholder lawsuits. They also mention potential impacts on their relationships with customers and employees during this transition. Looking critically at this deal, Clearwater is offering $24.55 per share in cash. We need to consider if this is a good price. If we didn't have the financial tables right here, we'd be guessing. But a cash offer often signals that the acquiring company sees underlying value that the market might not be fully recognizing. Or perhaps they believe they can generate more value themselves. The go-shop period is a strong indicator that the board genuinely believes they might be able to drum up a better offer, which is a positive sign for shareholders seeking maximum value. It shows confidence from the board and the special committee that they have leverage and that the current offer might not be the absolute best they can get. The fact that major private equity firms and investment managers are providing the financing, especially the equity commitments, signals significant confidence in the deal's viability and the future prospects of Clearwater once it is under new ownership. One key risk to watch is the shareholder approval. If a significant portion of shareholders don't approve the deal, it could fall apart and Clearwater might have to pay a substantial termination fee, which we saw could be as high as $11.67 million in certain scenarios. Also, any regulatory delays could push back the closing date and potentially complicate the deal. Overall, this seems like a strategic move for Clearwater. Being acquired means it will no longer be a publicly traded company, meaning less public scrutiny, but also less access to public capital markets. The cash offer provides an immediate return for existing shareholders. The inclusion of a go-shop period suggests the board is actively working to maximize shareholder value. Which is a fiduciary duty. The substantial financing commitments from well-known investment firms indicate a high degree of confidence in the deal's successful completion and the future potential of the combined entity. Alright, that is our breakdown of Clearwater Analytics Holdings, Inc.'s latest filing. What is your take on this acquisition and what it means for the company's future and its shareholders? Drop your thoughts in the comments below if this deep dive was valuable for you. Hitting that like button really helps us out. And don't forget to subscribe for more corporate decoded insights. Also, make sure to join our Discord community via the link in the description. Thanks for watching, and we'll see you in the next one.